G'day everyone, welcome back to Pete's Investing. We take a quick look at trading using the Commodity Channel Index with the 350 period time frame. But first, the legal stuff. We're not offering financial advice, but rather to the educational series to help you make better trading decisions. For you newbies who haven't seen my videos previously, we normally trade the CCI 14 on a daily time frame for shares. So this is the CCI 14 down here. And what I've done is I've applied a moving average 20 to the CCI 14 just to smooth it. So you can see there the light green lines is the CCI 14. It's very jagged, and I've applied the moving average 20 to that CCI 14. So when you look at it, it's a bit smoother in terms of the highs and lows of the share price applied to the CCI 14. So what we're going to do now is look at this. Instead of a daily period, we're going to look at the CCI 14 on a weekly time frame. Now we go back to start of 2007 trading. You can see here to CCI 14, moving average 20 applied to a weekly time frame. So what we do now on a daily time frame, that's the weekly chart, and this is the daily chart. On the daily chart, we apply a CCI 350 with a moving average 20. So it's applied a longer CCI time period, which kind of replicates the CCI 14 on a weekly. So this is the daily. So let me now show you side by side. This is the daily chart, and this is the weekly chart. And I've gone back to 2007 for both charts. So again, this is a weekly CCI 14, and this is the daily CCI 350. Both applied with a moving average 20 on each CCI. So let's look at let's look at these. This is the zero line, is the red line for both of them. So whenever the CCI moving average 20 of the CCI 14 on a weekly breaks above the zero, while I'm holding it there, you can look over here. That's the equivalent there, roughly the equivalent of the weekly CCI 14 on a CCI 350 on the daily. So you can see here again on the moving average 20 of the CCI 14 on the weekly, that breaks above the daily CCI 350. And again, on the moving average 20 of the CCI 14 on the weekly, it breaks above the daily CCI 350. So basically what I'm saying is the CCI 350 on the daily chart very closely, but not exactly, replicates the CCI 14 on the weekly. Here are the trading rules for the Commodity Channel Index 350 strategy. We enter the initial trade when the moving average 20 of the Commodity Channel Index 350 breaks above -200, -100, 0 or +100. We exit the trade when the share price has gained at least 5%. We average down when the share price has declined by at least 5% and the same entry parameters as our initial entry have been made. In other words, the Commodity Channel Index 350 breaks above -200, -100, 0 or +100. Also, when we average down, we buy 1.5 times the previous number of shares bought in dollar amounts. So if we paid $2,000 for this first lot of shares, we now buy an additional $1,000 worth of shares on top of that. So $3,000 worth. First, we'll demonstrate a single trade. So you can see here the CCI 350, that's the dark blue line, the moving average of the CCI 350, breaks above the zero line. We enter our first lot of shares there, and we exit when our share price reaches our 5% gain. So draw a raw there, and the 5% is reached there. That's 5.3%. So we close out the first lot of shares there. Another trade is made here, and we put our ruler there at the close of that day. That's where we open up our shares. We buy $2,000. Share price goes down and starts going sideways for a while. Then it appreciates and it closes out there. Now we enter the second lot of shares. You can see there when it breaks above, in this case, the +100. Remember our trading rules. When a CCI 350 moving average 20 breaks above the -200 down there, or the -100, the zero line, or the +100, that's each of those parameters we can enter a lot of shares or average down. So in this case, we entered a lot of shares when it broke above zero. We open up another trade when it breaks above +100. So wrapping up our second lot of shares there. Share price goes sideways for a while and it finally closes out there at just under 5%. Okay, here we'll demonstrate an average down approach for multiple entries in one trade. So here you can see here the CCI 350 breaks above the zero, our first little trade there, and it closes out with a 5% gain. A couple of days later, it enters another trade. When a CCI 350 breaks above the plus 100, we enter our first lot of shares there for that initial trade. Share price goes sideways, hasn't broken above 5% gain, so we don't close out, and it keeps dropping down. Again, it needs to drop by at least 5% decline before we consider entering another lot of shares. It breaks above, the CCI 350 breaks above zero there, but it hasn't dropped far enough from the entry price to warrant another entry. Even though it did here, it needs to break above the CCI 350. So it may have dropped 5% down to this point, but we want to make sure that the CCI 350 breaks above our entry parameters before entering another trade. So it keeps declining. Here it finally breaks above minus 100. We enter another lot of shares there. Share price keeps declining. It broke above the minus 100 there again, but it hasn't declined from our previous entry of more than 5%. Remember, when I go 5% decline from each trade we make. So it keeps going down, finally enters and it breaks below 5%, and it breaks above the minus 100. We enter our third lot of shares there. Finally, the price appreciates. Now remember, every time you average down, the share price average declines. So after the initial trade, after entering the second trade, our average price would have been somewhere there. Not at that point, would have been somewhere in the middle there. After our third trade, our average price would have been somewhere in that range there. So we're going to want to make a gain from our average price, and that's where we close out when it gains a 5% gain from our average price of the 3 trades made. Here are some of my investing rules. Buy proven blue chip stocks only, avoid speculative stocks. This ensures the probability of the shares of the company you're buying has had a good track record and more likely potential of future growth. Buy stocks which pay dividends. Do a quick search of the stock before buying to ensure it recently paid a dividend or is about to. This is a good indicator that the company has future potential of growth. If the company recently stopped paying dividends, it may be a sign that their growth potential may be challenged. Don't short positions, go long only. If you short up an instrument which pays a dividend, you'll end up paying that dividend to someone else who went long on the same instrument. Do not trade on news. Price is already factored in the share price. If you read an article in the finance pages which talks about an event on the stock you're considering, the chances are it has already been factored in the share price. So you've missed that boat. I did a video in September 2021 titled Uranium Stock Too Late to Trade, which demonstrates the effect that news has or hasn't in the share price action. Suggest you watch that video to get a better understanding. Thanks for watching. Don't forget to click the subscribe button, like button, and click the notification bell to get all the updates to the channel. Happy investing and see you in the next video.